Well, welcome back to this month of Housing Update for November. And today I have Gerri Swanson from Amerifirst Home Mortgage with me. Good morning, Gerri.
Good morning. Thank you for having me.
Yes. So let's just get down into it. There's been so much that's happening right now with mortgage rates, right? We've seen a lot of craziness. Will they keep rising is a question that we're getting. And let's just look at a couple of different things, Gerri. Look at what happened this year. I mean, from that perspective, is that just not crazy? Have you ever seen it in your career?
I have not. In the 8.5 years I've been in the mortgage industry, these are the highest that I've seen them, and I've not seen them climb that quickly.
Yeah, and when you look at that over, I think this goes back to maybe 20 on this slide, if I could see right, they have just consistently gone up. But Gerri, there's good news, right? What did our friend Lynn Kiefer say about this?
He said the U.S. 30-year fixed mortgage rates have increased 3.83 percentage points since the end of last year. That's the biggest year-to-date increase in rates in over 50 years.
You know, Gerri, I didn't buy my first house 50 years ago because I'm not quite old enough to do that, even though I'm older than you. But that is crazy because, you know, we've never seen this in a market from this perspective. And, you know, I think that's really where we're going. Okay, we haven't seen this before, and we're seeing inflation. So what is George Raidu saying from manager of economic research at realtor.com?
He's saying with inflation rates still running at a 40-year high and the Fed expecting a few more rate increases to combat it, mortgage rates will experience upward pressure through the end of 2022.
So we're in 2022 and we've got upward pressure. So the good news is we just had a reduction.
Absolutely.
Right?
Yes.
But this upward, so, you know, I know we have a lot of slides here to read, which is kind of crazy, but I think it gives us color and flavor to what's happening. So go ahead and read what Mark Fleming said.
Mark Fleming said, while mortgage rates are expected to continue to drift higher over the coming months, much of the rapid increase in rates is likely behind us.
Oh,
that's good.
Nirvana.
Absolutely, yes.
So by the time we get to 2023, we might be seeing more normalized rates, which would be awesome.
Absolutely. That's the prediction.
That's a prediction. And, you know, one of the things that you've told me many times is
marry the house, not the rate.
Date the rate, baby. Just date the rate. So we've got a couple of different things. If you're looking to get a mortgage and not pay cash with some out of the box thinking that can get that payment down, Gerri, talk about 3-2-1 buy down.
3-2-1 buy down is a great program for people that are a little bit nervous on the affordability factor, especially in the beginning, the first or second year. Mm-hmm. So they can take seller credits, seller concessions, and use that to buy down the rate. So it's the first year is the biggest drop in the rate, and then the second's a little bit higher, and then the third is a little bit higher. And it is a 30-year fixed rate mortgage. It's just that for the first 3 years, it increases just a little bit just to kind of ease them into, having a higher payment or, getting used to having a mortgage. So.
Absolutely. And, with that too, if the mortgage rates come down and you're dating the rate, maybe you refinance within 3 years, or maybe you're moving to your next house, right?
Absolutely. Absolutely. The rates are going to come down. Historically, they do, do a little bit of a volley up and down. So there will be, a boom in refinances. We can't say exactly when, but, within the next, 2, 3, 4 years, it's coming through. So if a buyer is not planning to stay in the house for that long, maybe the first few years, or they're, going to,
if they have other needs on what they need for their home, like increased people in the home or less people in the home.
Right. Some people aren't, planning to stay. That's not going to be their forever home, especially for a first-time home buyer. So a 3-2-1 buy down is a great idea because the rate will be reduced 3 points the first year, and then each year it'll go up 1%. Yeah. And, if they're not in it, 4 years, the beginning of the fourth year, they sell it, and then, they've had those low rates for the first 3 years. And when the rates do go down, they refinance, then they're in even a better position. So it's just kind of an idea to get the mortgage payment down every month, to get people to feel that they can afford it a little bit better and ease them into a mortgage payment.
Absolutely. Now, Amerifirst Home Mortgage also has something that nobody else has, and that's something called Seller Boost. So if you're looking to sell and you're worried about interest rates for your buyers, this is a great program that they could sign up for.
Absolutely. So houses are staying on the market a little bit longer. As you know, that's your expertise.
Yeah.
So sellers are looking for ways to be able to, get their home sold,
Right.
get it off their, getting their home sold and, not waiting as long. If they're on for 45, 60 days, they're kind of used to what it was, several months ago where they were kind of flying off the market. Seller Boost program is a great idea because it locks the rate on the property, not the buyer. So it's 2 percentage points less than the current rate. So that's a huge difference. So if the current rate was 7%, now they're going to lock the interest rate on that property at 5%.
Right.
So when buyers are looking and they're used to the 7% rate and they see something at 5%, it's going to draw more buyers into their home, more traffic. It's going to help the sellers sell the house faster. And if they were considering giving some lowering the price, they can use, instead of lowering the price, use that same amount of money towards seller concession, which will help the buyers buy down the rate. So that's going to help it sell a lot quicker, right?
Absolutely. So those are just a couple of strategies that Amerifirst Home Mortgage has to get that out-of-box thinking for you to either sell your home or buy a home. And right now, interesting thing is we're starting to hear, because we're hearing inflation numbers, is, a recession around the corner. And in January, only 18% of the analysts were saying yes. Well, guess what? We're in October, and that number has increased to 63%. But, even if there is a recession, which, it does not mean that the prices are going to fall. Out of the last 6 recessions, the prices only fell twice. And one of them was in the Great Recession that we had in 2008. The other one, it just went down slightly in 1991. Which was about the time I was buying one of my homes. I think I bought one in 89. I think I bought one, or 87. I think I bought one in 91. So, it was what it was. But, Gerri, recession, does it or does it not mean falling mortgage rates?
It does. It does. The last 6 recessions we've had, the mortgage rates have fallen.
Yeah.
So that's just a historical number, and the potential that that's what's going to happen is what's expected if we do go into a recession.
True recession. And you know what? The Fed does it. They throw grit. That you see it on the news all the time. They throw grit in the wheel to get the inflation slower. And that means interest rates are higher.
Right.
And then it starts to come down and they're like, oh, okay, we need to really
slow down. Yes.
All right. And so then the interest rates come down lower. So for people to start buying more, which I love. Now, the question is what are experts saying about home prices? Well, Gerri, there's a slide here. Let's read this, what Taylor Marr, Deputy Chief Economist from Redfin, is saying.
For those bearish folks eagerly awaiting the home price crash, you'll have to keep waiting. As much as demand is pulling back supply, is as well reducing downward pressure on prices in the short run.
Yeah, downward pressure on prices. So, if you're thinking that it's going to crash like it did in 2008, and I have this conversation almost every day, Gerri.
I do as well.
I think I'll wait because the prices have to come down. They just have to. Well, it's interesting because when you start to look at that and what the home price forecasts are, earlier in the year, it was much more bullish. It was like a 10 or a 12% increase across these 6 analysts. Now, they're looking like it's going to break even for home prices in 2023. And that was, by the way, they were looking at 2022, which we have had great increases in 2022. Now in 23, they're like, maybe not so much. But, what's interesting is those are like all the resale, looking at resale in the whole market. These guys, the big banks, are looking at huge downs because they're looking at commercial or let's put it this way, the big box builders that are out there that they're giving loans to. So that is slowing down as well. I mean, we had lines of people waiting for a house and, them to release a lot so they could build. Yeah. Those lines are no longer.
They stopped taking contracts from what I understood, right? Because they were just too far out.
Yes, they were.
The building process.
They were. And so now, we're seeing that ease, which is great because now we have other options for our clients who may want to build versus, buy resale. Right. But that's what those economists are saying from that perspective. But you know what they're saying? Wells Fargo at least said? They said 5.5 reduction for 2023, but look at what they're saying for 24. It's going to bounce back up.
That's right. Up 3.1%.
Yeah.
So if you think about the people who had that mindset at the beginning of 2022, when the prices were skyrocketing, they said the same thing. Buyers were like, I'm going to wait, prices are going to drop. I'm going to scoop them all up at that time. And they didn't do that. They just continued to go up. And then so did the interest rates. So those people that waited could have been in a property that was significantly, less in cost at the time. Yeah. And so having that mindset is really kind of the opposite of, the way they should go. So if they wait again and consider waiting till next year, that same house is going to be probably higher than it is today.
Because you're going to see in a minute, we really don't have more inventory and there still is buyer demand. So go ahead and read what Lynn Kiefer, the deputy chief economist from Freddie Mac, is saying.
He said, while there might be little statistical difference between a small positive number and a small negative number, there are often huge differences in how they may impact behavior.
Boy, you're telling me. And isn't it that headlines are out there to terrify and not clarify? And we're going to show you that in a minute. But, whatever the news is, it creates this fear of people. And look at what happened, Gerri, with the home prices that depreciated for 5 years in what we'll call the Great Recession, which started in 2007, 8, 9, 10, and 11, which, by the way, was about the time I got in the business. And so,
perfect timing.
But then, good timing. But then look at what happened in, 12 and 13, and then craziness of what happened in, beyond.
Absolutely.
But, Gerri, people are asking me about foreclosures. They're like, okay, set that aside, but there's going to be all these juicy foreclosures out there.
I hear the same.
Right? It's crazy. So with that said, look at this, Gerri. Look at the foreclosure activity where we started at over 1 million. And that was what, 2007, 8, 9, 10, 11. And then in 12, it almost was a little bit under. And then look at where it is today. So let's see what Adam Data has to say.
It says only about 214,800 homeowners were facing possible foreclosure in the second quarter of 2022.
Yeah.
Or just 0.4% of the 58.2 million outstanding mortgages in the U.S. Of those facing foreclosure, about 195,400, or 91%, had at least some equity built up in their homes. I mean,
they're not going to foreclose.
0.4% is, may as well be zero.
That to me is exactly 0.4%. It must be zero. So if we kind of blow this up one more time, I just want to make that point. 0.4%. Whoa, exactly. I feel like I'm in some crazy show. But at the end of the day, foreclosures are not going to happen. People have too much equity in their homes. And we've been talking about this and talking about this and talking about it. And I don't mean to kick or beat a dead horse, but it really, I hear it on a regular basis. And there's just tons of equity in these homes.
As well as we have many more qualified buyers now.
Right.
The rules are not the same as they were back in the, 2008, 10, 11 timeframe.
Yeah.
Everything changed. So to qualify a buyer, it is a significant difference today than it was then. Yeah. So we have so many more qualified buyers that the foreclosure rate is so low because of that, as well as they have so much equity in their home right now.
I love that you brought that up.
Yeah.
I love that you brought that up because you really tightened it.
Absolutely. I mean, there are checks and rechecks and rechecks, and they have to qualify, it feels like 5 times over in 5 different ways. So, and of course, that was in response to what happened, in
the Great Recession.
Exactly.
Yeah.
So it's turned out to be, a significant difference and helps everybody, right?
Yeah, absolutely. So really, this is, again, the same slide. I probably got that in twice. But, Rick Shark from the EVP of Adam, I want you to see what he said when you pull apart the report, and then we're going to show you the headline.
He said, anyone waiting for a huge foreclosure wave will probably be disappointed by this report from Adam Data. Foreclosure activity was flat Q1 to Q2, and foreclosure starts dropped slightly from August to September. They dropped.
That's incredible. Mm-hmm. Now let's look at the headline. You want to read that headline?
The headline reads, which seems completely opposite of that statement, was U.S. foreclosure activity continues to increase quarterly, nearing pre-pandemic levels.
oh, my hair's on fire. I shouldn't, there's going to be foreclosures.
Exactly.
No.
So people panic as soon as they see that.
Yeah. And why they put that out there is headlines terrify and not clarify. You know, we've said that a lot on this show just because of the fact that that's what's happening. Now, you know, I love this slide. It speaks to my heart because, you know, housing supply is historically low. And when you look at the far left, it says between 22 and 21, yeah, we're up 39.5%. But when you look at 22 to 20, it's only up 6.3% with supply.
Right.
But look at 19. We're down from 19, and that was a normal market.
That's significant.
That is around the U.S. And that's for the week ending in October 28th. But I'm going to show you a little bit about what's happening in Southwest Florida. Gerri, housing supply is still historically low. So we're almost on par with 22 to 21 is 34%. We have more inventory than we did in 21. But look at what happened with 20 and 19. We're less. We're 56% less in 20, and we're 74% less in 19. So we don't have any inventory.
Right.
Yes. Now, days on market, people say, what's happening there? Well, days on market are growing higher. Again, if you look at, and these color codes are Marco's in red. I think Fort Myers is in orange. Naples is in green, and blue is the entire MLS. But I wanted to kind of put those out there because you can blow this up or ask me for this slide later. But you see all of the, and I look at those as individual different markets here. You look at all of them, between now and 21, we are definitely have more inventory. But these numbers down here, we have like 50%-ish less inventory in 22 than we did in 20 and 21. Now, my friends, if you think that we have too much inventory, no, but days on market is much higher than last year. But I kind of liken it this way, Gerri.
Absolutely.
You're coming off the freeway. Don't tell the cops. I'm going 85-ish. And I hit 951 coming south, and it's 45. And I know that if I go more than 45, they are going to ticket me because I have had tickets there. And it feels like I'm crawling.
Right.
Right? Well, that's what's happening in our market. It feels like we're crawling.
And to that point also, it is a good thing because now that they're sitting on the market longer, sellers are willing to negotiate. Sellers are willing to give seller concessions or lower prices.
Yep.
So it does, as much as it is still a seller's market, it's now more of a buyer's market than it was, several months ago. So
we can breathe. There's not 5, 10, 20 offers on that house.
Right.
That you can't really kind of go, how do you win? You had different kind of buyer fatigue.
Yeah.
I'm putting offers, and I'm losing. And then I get frustrated. Now I get a little more time to go out, pick the house I want. There may still be multiple offers, Gerri, and there still are some, depending on the price. But at the end of the day, days on market a little higher. That's not a bad thing.
Right. And the buyers from that time that just kept losing out on offers and they're getting disappointed and they finally just pulled out and said, we're done. Those are the buyers that can now get a contract accepted.
Yes.
The rate's a little bit higher, but again, marry the house, date the rate, right?
That's right.
They can get them in the door. Their payment might be, a little bit higher than it would have been back then for a year or 2 or 3. But if you think about what they're paying in rent a month.
What is an average rent? Now that you mention it,
I might just have that data. Average rent for a 2-bedroom apartment is about $2,500. So that per year is a whopping $30,000 that people are just giving away, right?
Like water down the drain.
Exactly. So if a mortgage payment is higher, even by $3,800, I'm sorry, not $3,800. If it's higher by $300 a month, right? That's $3,800 a year more than they would have paid if the rate was, down in the mid 5s.
Right.
So $30,000 versus $3,800 per year seems like an obvious choice to me. Now, as long as they can, be comfortable with the payment, but again, it's a way for them to get in the door. And I think that buyers, when they hear rate in the 7 or 7, because they're so used to the 3s, they immediately assume they can't buy and just put off the dreams of home ownership and don't even try. But it's always worth the effort. and at least to see, when you see the numbers, on paper, it can get a lot more people, purchasing.
Absolutely. The close of this is it time to move? Well, we don't know. Only you can answer that. But I'll tell you from a buyer standpoint, whether you're a second home, an investor, or a first-time home buyer, somebody that needs a mortgage, we submit that now is the best time to move because we only see the interest rates moving around that you can date, and we see the prices going up. So until next time, I'm Mary Bartos with the Bartos Group of Premier Plus Realty and my co-host,
Gerri Swanson with Amerifirst Mortgage.
And we look forward to seeing you on the next episode of Housing Update. If you're interested in more data on this, make sure you subscribe to our YouTube, Bartos Group, and you can click the little bell for the notification when new content comes out.